Growth has done very well against value in recent years, and you recently appeared in financial news headlines when you told your investors that Greenlight's reliance on value may have been wrong. Do you think that this trend will reverse, and how have you coped with adjusting your own investment philosophy after so many years?
Okay, this is the problem with communication. Sometimes when you do what is called rhetorical writing, or ironic writing, or maybe even slightly sarcastic writing. And so I wrote a missive to our investors in our quarterly letter, and I was a little bit sarcastic, and I think many people understood what I was trying to say, and some people took it absolutely stone cold, Amelia Bedelia literal, and came to the opposite conclusion of what I was saying. So what I was basically saying is look, value investing over time has worked. We think that this is the best and right way to invest. It's not going to be true every day in every environment. We are in an environment right now where it doesn't seem to be working at all. And in fact, the opposite seems to be working because people are looking at things and saying the ownership of a company is something other than the risk-adjusted future profits of the company. Maybe it's the social disruption, maybe it's the social desirability, maybe it's the charismatic value of the CEO or whatever it is that you have that is contributing in the market's mind to the equity value of these companies. I would equate this sort of from a decade ago when people thought that companies should be valued based on how many eyeballs were watching on their screen. And so I think that this is a cyclical phenomenon, and people would like to say it is different this time. Our philosophy is that it's not different this time, and at some point this will revert. But nonetheless, sitting watching the portfolio trade every day and watching companies that don't make profits, don't have real prospects of making profits, may not even exist for the purpose of making profits, have the values of those stocks going up a lot, while other companies that have the misfortune of actually trying to earn a return on capital and pass some of that on to their shareholders, see their stocks derated and devalued in the present environment. It's a challenge to our strategy as long as that persists. And our results over the most recent period have certainly suffered because we've been investing the more traditional way. At least that's the way I would describe it.
Okay.